Evening, everyone. It's 8:53 in the evening on Thursday night, and I'm speaking to you from intergalactic headquarters of Great Wise Oz, and I want to give you an explanation of the oil trade that we made today. As you know, we bought the calls in the UCO. We bought the 32s, and here's what I'm looking at. Let me go back to the actual commodity first. Trying not to make the same mistake that we made last time, which was thinking that oil was going higher. And so we bought the XLE, and clearly that was not well thought, only because the market went lower. And so it dragged the stocks down while oil made a run to the upside. So I'm trying to avoid that. So this is the actual crude for June delivery. And as you can see, we made a lower low yesterday, not today, Thursday, yesterday, Wednesday. We made a slightly lower low, and then we turned and rallied and finished up on the day and right near the high. Today we had a higher low and a higher high. Where we are, though, is right below these tops, right under 29, right around 29 and a half or so. This is similar to the same thing that we did with the silver, but it's also similar here to what we saw at around this same price range, a little lower. This one's uh, 20, pardon me, 78.20, and these three tops in here are around 79.30 or so. I am looking for it to move higher. And the MACD, which was showing a vastly oversold position, have cricked back to the upside. This is the daily. And it looks like we'll cross those tomorrow morning as long as we don't open sharply lower. And tonight we're up another 16 cents, as you can see here. Um, a look at the UCO shows on the daily, same kind of a situation, except that yesterday's low hit the lower Bollinger Band on this trade, all the way down here at 30.05 and closed at 31.32. This morning we have a slightly higher high and clearly a higher low. So I like this. We also have this downtrend line that I think we're probably going to go through tomorrow. And the upper Bollinger Band is all the way up here at 34.65. I bought plenty of time in these. They're June 21st, so the regular third week in June expiration. Another look at this on the weekly shows even a better pattern, and that is we have this flag here, perfectly formed, bouncing off this yellow line, which is the 50-week moving average. And so I'm expecting if we get a higher high here from last week, which was 31.97, today's high was 31.89, it looks to me like we will get a move again up towards that upper Bollinger Band. In this on the weekly, that Bollinger Band is up around 35.80 or so. We may have a little bit of trouble in here around these highs, which are 30, 31.97. That's last week's, but the next week back was 34.42. 34.42 would be a nice trade here because of the amount of time that we have and the fact that we only paid $1.40 for them and they have an inordinate amount of time. So I would expect that to cushion any move to the downside to test those lows and would add pretty quickly to the upside if we don't. So that's the reason that I bought these. And, let me just take a look at the weekly here. The weekly and the actual commodity shows same basic kind of pattern, flagging out, but in a little bit more extreme way. And remember, this is the 200-week MA, which even if we've gotten close to it, we have not closed below it since we went above it way back in here. Tested it, closed almost on it, reversed the following week, came down, tested it, closed mid-range, test, all successfully. Same situation through here, closed right on it back here in the end of January, immediately turned back up. So proximity to it is more than enough, I think. And I think that this drop off in the open interest shows some liquidation. And I think that we're probably under owned in crude. And when you have world situations like we do currently, um, I think that that can turn on a dime and move sharply higher. Have a good evening, everyone.